Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menasce. This is the weekend edition where we interview notable people from the world of real estate investing. Today is no exception. We have a great guest all the way from Birmingham, Alabama. Welcome to the show, Damion Lupo.
Victor, it's great to be back.
Great to have you here. You and I have known each other for a number of years and developed a friendship, and it's been a while since you've been on the show. But for the folks who haven't met you, maybe spend a moment, give a little bit of your backstory and how you got to this point in your journey.
I mean, my story started back doing like a lot of people listening. It was a little real estate back in the late 90s, and that snowballed into a pretty cool portfolio. I was pretty impressed with myself and built up this $20 million portfolio. And then 2008 showed me that I really didn't know what I was doing, and went from 20 million to negative 5 million in 12 months. And in this process, learned a lot, which I think is what's happening maybe right now in the market. A lot of people are learning a lot about cycles. And then so after that, started looking around and deciding what I wanted to do next. And what I found was there was a big gap in the market around retirement money, which most people have the majority of their net worth between their house and their retirement accounts. And I realized people didn't realize that they had these options that were out there, and most people were retiring scared. And I thought maybe there's something I can do about this, especially when I saw both my parents retiring basically broke. I thought I gotta do something about this and help people. And that's how EQRP was born, being able to share with people ideas around retirement fund investing in things outside of Wall Street. Because really what I learned and what I saw was that people wanted alternatives to just investing in mutual funds and having no say or control. And so for the last 10, 11 years that I've been sharing this message and helping a lot of people break out of those Wall Street shackles and creating this financial freedom, putting them in the driver's seat where they take responsibility for their retirement. And it's really just been that focus on breaking people's shackles and freeing people from financial bondage.
Well, the actuarial tables that are textbook, where you take a pile of money and you take 4% out every year until it declines to zero, and you hope you don't run out of money before you run out of life, is a little bit of a textbook myth, because those are averages. But as we know, the averages don't really exist. It's your personal specific situation where cost of living varies from one part of the country to another. Yield changes from 1 month to the next, from 1 year to the next, 1 week to the next. And so that idealized view doesn't really bear up in reality. You need a better plan in truth, right?
Well, you do need a better plan. I was having lunch yesterday with somebody that we're hiring, and he was telling us about he and his wife that together they make a couple $100,000 a year. And he goes, I feel like we don't have, like, we're literally spending everything we make. And he's a super smart guy, well versed in finance, has 4 kids. And he's sitting there going, we're strapped. And so that model doesn't work because it's making all sorts of assumptions. It's using averages. It doesn't and the biggest problem, Victor, with that whole model is you're not really in charge, because you're just hoping. Your entire plan is based on hoping that the market will work out and provide for you. It doesn't put you in control. It doesn't build you up, building any confidence. And that's the problem I have with this Wall Street or financial advisor model. It's not developing an adult investor. It's keeping people really as children and just saying, okay, mommy, daddy, can I have some helpings? Like, it's, looking at Wall Street or the financial markets as your savior instead of you being in charge of your destiny. And that's what people need to really shift into. Everybody has to learn how to be an investor. And that doesn't mean you just hand your money over blindly. It means getting to know people like you, doing deals, understanding what the deals look like. It's stuff outside of just abdicating responsibly. It's truly about taking responsibility.
That takes me back to 2004. I joined as an executive of a semiconductor company. I was an officer of a U.S. public company, and watched the CEO of our company go on Jim Cramer's TV show and lie to the American public. And it really just opened my eyes, because I grew up in a world of stocks and bonds and Wall Street. My uncle owned a seat on the New York Stock Exchange, back when it was a nonprofit corporation, before that, even when it was a partnership. So I grew up in that world. And today I hold almost no stock in public companies, because it really showed me that the individual investor has no control. It really is the Wall Street casino. And I really had gravitated by experience to the world of investing in real assets, where the benefit of inflation, we live in an inflationary environment, the benefit of inflation goes to the equity holder, because three things happen in inflation, right? The purchasing power for those on fixed income gets wiped out, savings gets wiped out, and debt gets wiped out. And if you know that, then how do you construct your affairs so that you come out on the winning side of that equation? There's a wealth transfer that happens in an inflationary environment. You want to be on the winning side of that equation. And by putting yourself in control, you have the opportunity to do that. And yet we often think that a retirement account doesn't give you control. How is the EQRP different in that respect?
Well, the EQRP is a type of 401k where people can take their retirement assets, their IRAs, their 401ks from work that where they've worked or maybe even still working. And basically it's putting those assets in your hands where you get to control them. Not to pick stocks, which you could, but it literally writing a check, investing in things that you like, things that are part of whatever matters to you. So like whether you say I want to buy some gold or I want to be a part of an investment in an apartment, like one of the things that I love is we have a lot of our members that are investing in projects where they're developing things like you're doing with self-storage, our project where we're building manufacturing plants. Like they're investing their retirement money in things that are building back society because a lot of things we just need a lot of things and we need to build things. And so instead of saying, well, I'm going to speculate on Amazon stock or whatever people are doing, they get to invest in real things that they can put their arms around. And that for more and more people, that's becoming relevant. They want to know who they're investing with. They want to understand it's not just a black box that's making money out of something. They're not really sure. But like I understand self-storage. I understand how and why that works. And I understand that, you know what, the guy that I'm investing with, his name is Victor, and I can talk to him on the phone. It's not just some mysterious person on Wall Street that I could never actually get through to. And so the difference with EQRP is that it puts you in the driver's seat where you're able to invest in all these really cool things. And most people don't even realize that that's legal.
Well, not only that, it also makes it a lot easier when you're dealing at a more granular level to get a notion of value. If I gave you $100 bill and offered you to trade that for $80, you would take that deal because you can make a clean 20 the next minute. You know that you've got a notion of what a $100 bill is worth. But if I offered you that for $100, you might take the deal, but what's the point? Are you hoping the $100 are going to appreciate in value? Like, why would you do it? And when you look at things like, say, what is Apple stock worth? How do you really know? Or what's Netflix worth? What's their debt structure? What's their balance sheet really look like? How much financial engineering has gone on to juice the numbers to make it look better from an operational perspective, yet the balance sheet is a mess, as we've seen, for example, with some other recent transactions that have happened in the marketplace. It's very difficult for the individual investor to understand, are they getting a bargain or not? Whereas when you're looking at an individual asset, you put your arms around it. You can figure out, does this make sense? Is there value creation here? And I think that's part of the difference.
I think it is too. I couldn't even begin to try to figure out what a company was worth in the stock market. People say, well, let's look at the PE ratio, the price to earnings ratio, but the reality is it's so convoluted, and there's so many ways to have off balance sheet things going on, and so you really don't know. And I think the biggest problem is that we had so much cash pushed into the system. A ton of it went into the stock market, which just bubbled things up and created a lot of weird space. When we had zero interest rate environment, that for a decade, basically, where interest rate money was free, more or less, you had such an opportunity for these companies to leverage and take on unbelievable amounts of debt. Well, that debt is coming home. I mean, that was it. The rooster's coming home to roost, or whatever the saying is. And like it's the same thing with these banks that are there. Everybody's trying to figure out what to do with all this debt in this environment. It's easy to take on debt when there's basically it's free. But now, I mean, I was reading something that even the Federal Reserve has a negative valuation because of all of the debt it has on its books. That if you marked that stuff to market, the actual value, the Federal Reserve, the central bank, the most important institution in the world in driving monetary policy, is actually bankrupt. And I was like, well, that's kind of a problem. And I think a lot of these companies that people invest in have a similar problem. They've financially engineered, like you said, their balance sheet to the point where they're ticking time bombs. And so I would much rather invest my own money and encourage people to have them invest their money in an asset that you understand, like, oh, this unit's gonna it's gonna be $100 per month per unit, and we understand how we're gonna make a profit. Like it's very simple. It's not mysterious. We're not gonna go borrow money to pretend we made a profit. Like you actually get it. So I really appreciate people like you that are doing these projects, and it's fun being a part of a solution and not just, moving paper around.
Well, that's the other thing is when we talk about wealth, Chris Martenson does a wonderful job of stacking it and talks about primary wealth, secondary wealth, tertiary wealth. Primary wealth are those things that are physical assets, land, agricultural land, things that feed, at the bottom of Maslow's hierarchy of needs. Then you start to look at paper assets, which is secondary wealth. So shares in companies, those are secondary assets. And then tertiary assets are derivatives, paper on paper, options, and things like that. And oftentimes people conflate those three notions, and they spend all of their time up in the ether in secondary and tertiary assets, thinking that their value is secure when in fact it's not.
And Victor, I think one of the things that what we can agree on is that most people don't really want to spend the time doing the research or doing their homework, and people are basically so busy and so stressed they just put their arms up and like, well, I'll just I'm not really sure. Like I hear that with a lot of people, and it makes me nervous when people do that, because ultimately, even when people show up here in my world and they're 50, 55, 60 years old, and they say I've got a couple of $1 million and they have absolutely no idea about money or investing, I go, the money is not the problem, because I can show you how to create money out of thin air, but the fact that you have money and no skills and you just want to throw your money and then hope it works out, that's the biggest concern I have, is we have a financially illiterate and investing illiterate society, and that's the problem is you get people like Bernie Madoff, that people go, oh, I'll just give my money to that guy, and they think that's all I need to do. And the problem is you have no idea what questions to ask because you haven't been through anything and you haven't done the hard work. And I can see that ending very badly for people. And so the most important thing people can do is invest in themselves. Like the conference we're going to be going to here shortly with the real estate guys, spending time in those environments with people that are doing things and then building that muscle.
Absolutely. In fact, I was having a conversation with an investor last night, and we have regular investor conversations virtually every day of the week. And it was exactly the situation you just described. Here's someone with sitting on a pile of cash and really didn't know what to do with it. Maybe I'll do this. Maybe I'll do that. Just really didn't have a clear image of what a good investment looked like for him. He wants to make money. Yeah, he wants to protect his nest egg, but the path to doing that was very, very fuzzy for him. And he's not alone. I think it represents the majority of people.
I do too. And there's not really an obvious path. Like everybody has to go and cut their teeth. They're not going to be taught this stuff in school. Unfortunately, most of our parents didn't know anything to be able to share with us. They gave us maybe what they learned from, the Farmer's Almanac or whatever. Like there's just not, our society is not set up to give us, even if somebody says, well, I have an MBA, and I'm like, okay, I mean, that doesn't tell me that you know anything about actually investing. It just tells me you can analyze a company's financial, maybe, or you can financially engineer something. But and that's why I remember over the years people saying, well, going to a seminar, that seems like a crazy thing. You're spending $2,000 or $5,000 for 2 days. And they think that's nuts. And I laugh and I go, you just spent 100 or 200 or $500,000 in college to get a job, and you're not even getting the information to know how money works, which is what you're going to spend the next 30 or 40 years working for, trading your time for. So I think it's wild that we've been, like, our brains have been engineered to think a certain way and do a certain thing that actually doesn't serve us well. It serves like the overlords. And so people do have to start thinking differently and doing differently.
So what's been your experience when folks, because what we described is an awful large percentage of the population, take something out of their retirement account that's with a trustee, and now they want to put it into a checkbook IRA of some kind. Are they equipped to actually even make the decisions, or how do you help them curate those decisions?
Well, usually what we'll suggest is for people to start doing something and doing it small. So people will say, okay, I've got my money, I've got my 500,000 or whatever their number is in their EQRP, and they go, okay, I'm good. I'm full of like I've got my gun. It's loaded full of bullets. Now what do I do? And I'm like, well, don't just start shooting things. You want to pick. And for people in Canada, they're like, oh my gosh, guns, bullets, freak them out. So hopefully, people take this with a grain of salt. But the what we always tell people is go do something small, and dip your toes in, because there's nothing better in terms of learning than doing. Like I don't care if you're reading or you're studying or you're listening, until you actually go live. It's like paper trading in the markets. People always say, yeah, I've done my model works really well. And I'm like, when you have real money on the line, everything changes because you're an emotional being. And it's the same thing when people go out there and the first time they invest, they put 25,000 or 50,000 into something. That's great. And I think one of the things that I would tell people is be a little bit more patient than you want to be. Everybody wants to have everything done. They have this money and they get freaked out. They go, inflation is going up. I got to get my money working. Well, if you force yourself into something, I promise you're going to have a bigger problem than inflation. It's going to be depletion of your entire base. Your capital is going to go away, and it's a lot harder to go recreate it. So really, it almost doesn't matter what you do if you do something and you do it small enough to where it's something called position sizing, where you invest with enough money to where you feel it, but not enough to where it's going to hurt you. If you ended up losing 5 or 10% of your money, you're going to learn a bunch, and that's the most important thing. It's actually not even important that you have a home run or you do super well or whatever with that first one. It's important that you did it, and then you learn as much as possible, and you use it as a learning opportunity. I'm not saying go lose money. I'm saying go do something, and if you lose money, don't worry, because that's how you learn, is by going through the actual process of whatever it is.
Absolutely. I mean, if I think about the very first investment that I made, I didn't make it, it was made for me. My uncle, who owned a seat on the New York Stock Exchange, recommended that we purchase shares in two companies that were scheduled to merge. And my very first investment as a preteen ended up losing $10,000 when the merger fell through. So that investment went to zero. That was my very first, very painful lesson as a very young investor.
That's funny because I had the same one, 10,000 first investment, and it went to zero.
Oh, really? Well,
Yeah, I learned a lot. I'm like, wait, don't just go with speculation. Somebody gives you a tip and it sounds exciting, and you go through everything you have, and that was the first of three times I lost everything. And gosh, you learn a lot when that happens.
well, Damion, if folks want to connect, if they want to learn more, what's the best way?
Reach out to us. You can find us at eqrp.com. If you want to reach me, just go ahead and shoot me a message on LinkedIn. But eqrp.com is a great place to connect, and give you a copy of the book about the retirement space, and help you learn and grow your investing muscle.
Fabulous. Well, Damion, great to connect, and look forward to seeing you next week in Dallas. And for the listeners at home, definitely connect with Damion Lupo at eqrp.com. The link will be in the show notes. And in the meantime, have an awesome rest of your weekend. Go make some great things happen. We'll talk to you again tomorrow.